Welcome to GRE. I'm your host, Keith Weinhold. Chances are you may very well have been making something like $438 per night in your sleep lately. I'm going to discuss why, learn about what your options are when it's time for you to sell your investment property down the road. Then I'll discuss a special part of the nation that has some of the most profitable cash flowing real estate anywhere with the team that knows how to deliver it today on Get Rich Education. Checkbook IRAs have been ruled illegal by the U.S. tax court, with contribution limits 10 times what traditional and Roth IRAs allow. Get total control of all of your IRA funds without paying the nasty UBIT tax with the retirement plan answer left standing, the EQRP. You can invest your retirement funds in real estate, gold, Bitcoin, and even your own business. This works whether you're a solopreneur or have up to 50 employees. Learn more about getting started. Text EQRP in all caps to 72,000. The annual Spartan Summit is on. I was the kickoff speaker at the last event. This year they are back in person, and the keynote speaker is none other than Shark Tank's Damon John. Learn from industry experts on real estate, tax strategy, lending, and entrepreneurship. You'll also get to tour tangible turnkey income property in growing Alabama markets. It's coming February 16th to 18th in Birmingham, Alabama. Get your ticket or learn more at SpartanInvest.com today.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Thunder Bay, Ontario to San Francisco Bay, California, and across 188 nations worldwide. I'm Keith Weinhold. This is Get Rich Education, expanding your means with real estate so that you can live your daydream. Now, although real estate appreciation rates over the last year are hardly sustainable because they've been so high, I've been telling you that what's happened is really something that's worth celebrating. Think of it this way, and this is almost mind-blowing stuff. Say that you own a $1 million real estate portfolio. Now, if you're a beginner, I know that might sound like a lot, but understand you might have invested as little as $200K of your own money and borrowed the other 80% in order to get this $1 million real estate portfolio. Okay, to make that sound obtainable, that might be just four $250,000 single-family rentals that constitute this $1 million portfolio of yours. Now, real estate appreciated on the order of something like 15 to 20% in the past year nationally, so let's just be conservative and say that you achieved 16% appreciation on this $1 million real estate portfolio of yours. All right? Then that is a $160,000 gain that you achieved on this just from appreciation in just the last year alone. And that's not even all of the other ways that real estate pays. So I'm being really conservative in a second sense here with your 160K gain in the last year. I'm just calling it 16% in this 15 to 20. And it's only one of the ways that you're paid. I'm only talking about one of your profit centers. And here's the jaw-dropping part. Your 160K gain in the past year, that translates to $438 per day, every single day. Yes, that's how much your wealth has grown in the past year. $438 per day. And hey, if it sounds more compelling to you, if you wish, you can say that you made $438 per night in your sleep. I guess that does make it sound more passive. And think about it this way. This is not something that's out of reach for middle-class people. Like, everyday people can do this because, again, this $438 per night that you made in your sleep this past year, that's off as little as $200K invested. Wow. I mean, if you've been following along with my plan, with the core part of your portfolio constituted by directly investing in rental property, like the way that we do it here, you might have said to yourself, I'm rich. This is some don't quit your daydream stuff right here. I've had a few people write into the show. They haven't so much written, hey, guess what? I'm rich. But they have really told me like this just all happened so fast. So if you are there, congratulations to you. $438 per night as you sleep. And if you've got a $2 million portfolio, which again, it doesn't take a silver spoon to get into that, that would take just $400K. Well, then you've made double this amount, $876 per night in your sleep. Yes, all from just one of the 5 ways that real estate pays. Now, let's whip around the other asset classes to compare them to real estate like we do from time to time here since we just began a new year a couple weeks ago, year over year. So this is December 31st of last year compared to the year prior. Gold was down 4%, silver down 12%. The S&P 500 was up 27%. Yeah, whether you like stocks or not, they did have a strong year last year. The yield on the 10-year T-note was up 60 basis points, and that's continued to rise since the end of the last year because the Fed is poised to raise rates this year. Bitcoin was up 59% last year. It's settled back down some since. Oil up 55%. That's our quick asset class whip around. Those figures are not inflation adjusted, and inflation was high. So you want to keep that in mind. Hey, before we discuss the real estate content on today's show, there were a couple big news stories outside of real estate. Apple hit a $3 trillion, yes, trillion with a T, a $3 trillion valuation at the beginning of this year. They are the first company that's ever done that. And you know what? I guess that my purchase of an iPhone 13 last year contributed there. Ha! And get this, Detroit-based General Motors has been the top-selling automaker in America every single year since 1931. Yeah, that's every single year. 1931, 1932, 1933, all the way through to the year 2020. But then last year, it changed. Japan's Toyota dethroned GM as the number one automaker in the country in 2021. That marked the first time on record that a foreign car manufacturer has topped the list. I think they weren't affected as much by the chip shortage. One more important reminder, go to gremarketplace.com and create an account. It is new for 2022. That is our freshly new website where once you've registered, you're going to have access to all of our turnkey providers and other providers at the same time, not just one at a time, but all of them. And you can access sample properties, pro formas, the provider contact information, and you're also going to be able to see videos of our operations lead here at GRE, Andrea, interviewing many property management companies so that you can get a feel for this too. You'll see that property management video interview, and you can do that quite quickly at gremarketplace.com. So yes, GetRichEducation.com, that's still where you get the education in this very show is on that platform. Nothing has changed there. But for properties and getting actionable, it is now gremarketplace.com. And as it is a new website, we are open to your feedback in case you have any suggestions for GRE Marketplace. There is one remarkable place to invest in real estate in America that we want to focus on today for a lot of reasons. This state ranked third in Moody's Housing Affordability Index. It started over 125,000 new businesses just within the first 7 months of 2021 alone, and this state now boasts the 7th largest domestic economy. I am talking about Ohio. Yeah, that same well-located Ohio that's within a 2-hour flight of 75% of the United States and Canada. And the biggest names in tech, they know all of this. That's why Ohio is home to offices for Google and Facebook and IBM and Carvana. And it's also an attractive locale for more than just the big guys. Tech entrepreneurs in cybersecurity and AI and social media of all sizes have now started up in Ohio. And Ohio is also the 7th most populated state. And yeah, that fact there, that might just be one of those nerdy geography things that you get from a guy like me, isn't it? Come on, it was inevitable. You knew it was coming. I do swear that I will abstain from discussion about their topography or the flora and fauna in Ohio's forests. It's really hard to restrain me there. Hold me back. What about population growth of humans? In 2020, Ohio ranked fourth out of all 50 states in the U-Haul migration growth states. Yeah, those reports that the moving company U-Haul publishes. Now, buying and owning rental property, it can surely be super profitable, like I discussed at the top of the show. But after you own it for several years, what happens when it's time to sell your turnkey property? Well, single-family homes, they sure don't have all of the advantages over apartment buildings. There's an economies of scale difference there. But one thing that's nice about single-family rental ownership is that when it is time to sell, you don't have to find another investor to sell it to. We're talking about more than just single-family homes today. We're also talking about multifamilies in Ohio. But these are some of the advantages of single-family rental properties a lot of people don't understand. When it's time for you to sell that, well, an owner-occupied family home buyer might purchase it. And in fact, more often than not, when you sell a single-family rental home after years, an owner-occupied family home buyer probably will be the ones that buy it from you. And that is good news for you. You might be able to get a higher price because that buyer, they don't need to get the rent numbers to work, or they don't need to get it to cash flow because they're not renting it out. They're going to live there. So single-family rentals have multiple exit strategies, and that's regardless of the market cycle. And you just can't quite say that same thing about a 20-plex. The numbers have to work before an investor is going to buy something like that. But when it comes to selling your rental property down the road, we're going to talk about your options here. I'm going to discuss that today and even talk about just what you might expect to pay in agent commissions on the sale. Here we go. Today's guests are seasoned real estate investors who have bought and sold over 1,000 properties themselves, and today they serve as the co-founders of the Freedom Real Estate Group family of companies based out of Centerville, Ohio. That's between Cincinnati and Dayton, and that includes an acquisitions company, a renovation company, turnkey company, property management company, a brokerage, and a syndication company with over 40 team members and still growing. You're doing all that? I mean, you clearly are the power couple of the 21st century. Welcome to GRE, Flip and Dani Lynn Robeson.
Thank you so much. We are super excited to be here.
Thanks
and
so much, Keith.
We like to have fun and we like to build businesses.
You have so much to live up to after an introduction like that. Hashtag relationship goals. And Dani Lynn also serves with me on the Forbes Real Estate Council. And Flip and Dani, not that like you don't already have so much going on, but also quickly tell us about your new podcast series.
So it's called Freedom Through Passive Income, and it's a 365-day series. The goal was to have short and fun episodes because these days, a lot of people don't have a ton of time to be able to listen for, 30, 60 minutes. And if you know me, I could talk and talk and talk. So we squeeze them down to 8 minutes or less so that it's bite-sized pieces of information that's easy to consume and they can follow us along, the journey of achieving passive income.
People don't want to listen to podcasts that are 30 to 60 minutes in length. I'll try not to take that personally. I know what you're saying. But, really, what you guys are doing is you're really growing year after year. You now manage over 500 properties for investors, not just across the United States, but those investors are around the world. And they're often turnkey properties. And we think about turnkey properties and the market being more important than the property, in my opinion. Tell us about the why for Cincinnati and Dayton for you guys.
Well, we discovered Dayton actually first when we realized the amount of buying power that we had with purchasing the property and the 1% of the rental rate compared to the actual purchase price. It was just, we were blown away because we were down to Texas and Arizona and Florida, and you can't get these rates anywhere else. So when we discovered this, we immediately knew this is what we wanted to do, and we hightailed it straight to Ohio. In even where we're at right now, like you described, right between Dayton and Cincinnati, it's such a great area, this huge metroplex between Dayton down through Cincinnati. And even though we've been here now 7 years, it's still consistently, the rental rates are matching what everything else is going on. We're not pushing ourselves out of the turnkey model, out of that 1% rental rate. Everything has just been, it's continuing to grow. And it's just, we couldn't even have imagined that we'd be still doing what we're doing on a consistent basis.
And my favorite part is the Middletown, right? And smack dab in the middle of Cincinnati and Dayton. A lot of people don't even know about Middletown, Franklin. And we're buying so many properties in there because it's just the expansion is amazing.
Right. Yeah. And like you mentioned, you do still find that preferable 1% rent to value ratio there, which is remarkable in this day and age. I think of that area as having some of the highest rent to value ratios in the entire nation for a good renovated property.
Yep. And even Ohio itself is still in the top 5 of places to buy real estate investment properties. So when you combine that with, I got to go back to this because the whole Dayton and Cincinnati area, it's like Dallas, Fort Worth. And it's by, gosh, I can't remember what year they said it was going to be by, but it's like the next 10 to 20 years, it's growing so much that those towns that are between Dayton and Cincinnati, they're going to still be there, but it's just going to be this giant metroplex and it's going to be bigger than San Diego. It's just growing and it's just growing together. And we've got all of these major corporations coming here. We've got Amazon building. Every time we turn around, there's another Amazon distribution center going up. So there's constantly things coming to this area. We got movie studios. Actually, there was a new movie studio that just came to Dayton. And there's constantly things that are coming into Dayton and rebuilding it. And when we moved here in 2015, if you would have told us this back then, we were just like, oh, okay, sure. It's just constantly going and continuously getting bigger and bigger.
And we own 60 doors. One of them is a large apartment complex in Middletown. And there was a recent proposal that I posted on Facebook. Was it like a Hollywood land or, something like that? Like those are the cool things that are, happening in our area. It's super exciting.
It's like Megalopolis, Southwest Ohio edition.
Yeah. Exactly. Yep.
I know you offer a few different programs there, 3 programs. Tell us about those.
We have 3 different programs within the turnkey model. The first one is our signature series. This is our what we started with. This is what I always call our Big Mac, because you buy a Big Mac in Los Angeles, you buy a Big Mac in New York City, it's still a Big Mac. And so when we sell a signature series property, turnkey property, when you buy one, when you go to buy another one, guess what? It's the same materials. It's the same basic materials and everything. You're not worried about, did they use different light fixtures? Did they use different flooring on this one? So we keep it the same. We keep it consistent.
That was our classic turnkey is kind of what we say, because it's fully rehabbed, fully remodeled. And like you said, it's the Big Mac of real estate.
It's top to bottom. It's move-in ready. It's cash flow ready right when you close. But then we created a couple other programs, and one of them is called the Instant CashFlow Series. And this one was created because we were getting so many properties that were already tenanted, and they might have been tenanted for another 10 months. Well, we don't want to be waiting on these properties for 10 months to do anything with them or sell them or whatever. So we created this series so that way investors, what do they want? They want cash flow. These properties were already cash flow. Mm-hmm. So that's why we called it the Instant CashFlow Series. And so now we're able to sell these properties with tenants already in them, because that's how we bought them. And we just transfer the tenants over to the new investors. And now those investors, they have the opportunity to keep the tenants in them when their lease eventually does run out, or they can do whatever they want. It's an opportunity for those investors to instantly get cash flow from day one because there's already tenants in those properties.
Yeah. And those have higher cap rates as well, because we haven't remodeled it yet, right? So we're selling it at a lower price. So they've got higher cash flow typically. And then when the tenant does end up leaving, then they can still come to us for the rehab, but it can be a customized rehab, right? It's the rehab they want, not necessarily the rehab that we would do, because we do high quality and they're expensive rehabs. Maybe they don't want to do everything that we would have done. Right. It saves them a little bit of money and keeps their cash flow a little bit higher.
We always laugh because people will say, you just need to put a little paint and carpet on this one and it'll be fine. But that's not our standards. Our standards are so much higher than that. So that's why when she said it's our renovations are higher quality, we're closer to retail almost on our quality of renovations than the typical landlord that just literally throws some paint and carpet on the property. The last out of the 3 programs is the Equity Advantage Series. Now, this one is a property that we've gotten in. We've purchased it. It's vacant, but we haven't had our chance to get our renovations crew on it. And so this gives us an opportunity to sell it to an investor and say, hey, Mr. Investor or Mrs. Investor.
That's right. Don't forget us ladies.
That's right. Here's a vacant property. What would you like to do to it? You can do the signature series that we do on all of our properties. But if you don't want to do the LVT on the flooring and the different whatever fixtures that we do, and you want to do something different, then this gives you that opportunity. And so that's the third advantage, the Equity Advantage Series.
And what I like about the instant cash flow and equity advantage, these are all deals that are in our pipeline anyway. Mm-hmm. We're just opening up opportunities for our investors to buy it before we take it fully to the signature series. It not only gives them more options in terms of what they want to do, but it also gives them tax benefits, right? Because now they're the ones that are hiring our company to do the renovations for them.
Right.
I think it brought a lot of advantages to our client base, which is what we're always trying to do.
Flip and Dani, you're bringing up so many good points. So you're talking about having 3 different series of turnkey properties, the signature series, the instant cash flow, and the equity advantage. I'm guessing that you were probably really perceptive as to what your buyer has wanted over time. For example, sometimes a buyer might want to pay a lower price, which they can probably do with the instant cash flow series, where you just keep a tenant in there. And that way the price is kept down for the investor because you're not having to renovate everything. However, if someone does want to buy that way in the signature series, they certainly could do that with a fully renovated property where it might take a little time to get a tenant into it.
Yes,
exactly.
Yes, you nailed it. Good summary.
That is really interesting. I don't know of anyone else in the nation that's doing that. It sounds like you're really listening to investor needs, because investors do have different needs and wants over time. Some want the instant cash flow. Some don't need the cash flow so much right away. We know one thing that has changed over time is the chronic lack of inventory nationally. I know you are still turning over some inventory, but I think that's really the predominant investor question today. So tell us about what is in your pipeline now.
Now, right now, as of this day, we have 4 properties that are instant cash flow. 2 of those are multifamily, which is huge. We have 3 in our equity advantage series. And right now we have 20 properties in the pipeline going through our signature series rehab. And 5 of those are multifamily properties.
And we say the multifamily because, people call us all the time. Do you have multifamily properties?
That's all they want.
Very good. Now, I know when you do the renovations to properties, depending on which turnkey series one is invested in, you did touch on some of those standards, Flip. So just tell us more about those renovation standards, especially then in your signature series where you're doing complete renovations, as well as the warranties in addition to some of those renovation standards.
We built this from the very, very beginning, and it was through having conversations with other people that have purchased properties from other turnkey companies. And we are in the research and collection mode of trying to figure out what do you want to have. And so one of the big things was they don't want large expenses. They just bought a brand new property, and it's completely rehabbed. I don't want to see an expense, or a big expense for a few years. So it was HVAC, hot water heater, roofs, gutters, things like that. We're looking at those and estimating the life of them. Now, it's not a perfect science. We could have 3 people go look at a roof and say it's got anywhere from 7 to 15 years left. They're all going to do their best job. And so we're trying to have 7 to 10 years left of any major system or things like the roof on a property, so that the investor who is buying a completely signature series rehab property doesn't have to worry about that big expense. They know that we took a look at it and we've evaluated it and made sure that there was a good life on it. The other thing is we have central air on all of our properties. It is super rare for us not to have central air anymore. Now, I say that because people on our phone calls will say, what should I have asked that I didn't ask? And at first, I didn't know how to answer that question. But then as I got to know Ohio, we're used to Arizona and Texas and Florida. There's central air everywhere. Here in Ohio, it is not a common thing to have central air. At first, when we were starting doing turnkey properties, we weren't putting central air on the properties because it wasn't something that was a standard here in this area. We started doing that because we started seeing how the window units, how they can damage a property, right? With the leaks and if it's not properly installed. And we were like, okay, as a rental owner ourselves, we don't want that happening to our property. So we started putting central air on there. So that's another standard. As we sell turnkey properties and we see what happens here in Ohio, we see that plumbing is one of the major things that happens to go wrong in a property. So now we do main drain video scopes, and that video scope is a flash drive that goes to our owners. And we say, hey, here's the video scope to help give them peace of mind, because it's just something that we've learned. We're constantly trying to figure out how can we do better. And these are the things that we've done besides the normal durable flooring. We don't put carpet in our properties. And now we also have a final step for our property management company because we are vertically integrated. And so property management team, when the rehab is done, they go in, they check all the windows, they check all the doors, they do their due diligence to let the rehab team know, hey, this is what we need to fix before it gets released.
You're really keeping the tenant's life in mind when you are attentive to something like air conditioning that increases livability, which increases the duration of a tenant stay, which of course increases an investor's return over the long term because that tenant wants to stay in there. You listen to Get Rich Education. We're talking with Flip and Dani, Lynn Robeson. Be sure to check out their podcast called Freedom Through Passive Income. More when we come back here. I'm your host, Keith Weinhold. You know, a lot of investors choose either cash flow or home price appreciation, but one real estate market could provide both: Jacksonville, Florida. They've got 27% lower home prices and higher rents than the national median. Their market has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and above average appreciation for tomorrow. They often have available inventory in Jacksonville, if you can believe that. Start at cashflowandgrowth.com. The people that our listeners can't stop talking about are Ridge Lending Group, NMLS 42056. They've provided GRE listeners with more loans than anyone, and it's where I got my last few loans. They finance single-family income property up to fourplexes. They're the number one lender for beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and get your custom plan for expanding your cash flowing portfolio. Start at ridgelendinggroup.com. You can get a 50-year-old house somewhere or buy a new one directly from the builder with tenant-resilient amenities already built in. With over 3,000 Florida units at different construction stages, they are exclusively for investors. President Wagner and Alaska and team also invest strongly in their own product. That's belief. Start at buildtorentdirect.com. That's build the number 2 rentdirect.com or text 407-927-5074.
This is Entrepreneur on Fire's John Lee Dumas. Don't follow money. Make money follow you with Get Rich Education.
Welcome back to Get Rich Education. We're talking with the founders of the Freedom Real Estate Group based in Centerville, Ohio, Flip and Dani Lynn Robeson. You can learn more about getting started with their turnkey property where they've left you a pro forma and sample properties, and more about their markets at gremarketplace.com/Cincinnati or /Dayton. And Flip and Dani, seasoned investors know that property management is really the glue that makes this investment stick together over the long term. And I know that you do some things differently there. And again, it's because you have this experience about listening to what tenants want and then acting on that feedback, and listening to what investors want and acting on that feedback. So tell us more about the property management there.
I'm really excited because this is brand new to us, even within the last, I want to say, month, maybe 30 to 60 days. Something that we're always doing is trying to figure out how we can align our interests with our investors. As you know, we're owners ourselves, right? We are a client of our own property management company.
Yeah.
So the first thing that Chris will do, he'll run in my office and go, put your owner hat on. What do you think of this? And so I will. And so one of the things that we changed is we stopped charging leasing fees. And that is a lot of money that gets added up. If you have $1,100 a month coming in, your lease up fee is typically 1 month's rent. So that's $1,100. The interest is therefore in the property management side, right? They want to get that fee, that $1,100. Whereas me as an owner, I would prefer them to keep a good quality tenant in my property for as long as possible and not be incentivized by it being vacant and me having turning over costs and then additionally have a lease up fee of $1,100. We wiped out all lease up fees so that they are not incentivized in any way. To their actual true incentivization is now to keep the tenant, because now we're charging a lease renewal fee. So if they do a good job of keeping that tenant in there, they're going to earn $250 every single year to renew that lease. Instead of me having the vacancy and no cash flow, having all of the turn expenses on top of a monthly lease up fee. They walked in and proposed that. I'm like, I am in. Do it. So they just changed that. They went to like 5 or 6 other owners to get their feedback to see what they thought. Everybody was like, hands down, this is awesome that we want to do this. So that was a recent change. The other one was for the residents because we're trying to help both residents and owners. So the residents, we created a resident benefit package, and it's just a way to serve them better, like anniversary gifts and, welcome gifts when they get there and holiday. We even do newsletters with the gift cards if something happens, or a raffle, or we're just doing things to keep it fun and keep them very loyal to being in that property and taking care of it and being one of our valued residents.
One of the things I wanted to mention too quickly, I don't know if you caught that, but she immediately went from tenants to residents. And this is something that we don't refer to them as tenants. We refer to them as residents because they're residents in these properties and these investment properties. And so we want to treat them in such a manner that they want to stay. And the investors see that as well.
Yeah, it's a mindset shift, right? From tenant to a resident.
Yeah, that's very telling. Now, for a beginning real estate investor, there are typically two tiers of prices that you pay for a property management company. One is that ongoing management fee, which is often 8 to 10% of the monthly rent income that you'll see knocked out of your proceeds each month. And the second one is known as a leasing fee, where typically on a tenant turn, when that property management company brings in a new tenant, you, the investor, need to pay 1/2 of 1 month's rent amount up to about a full month's rent amount. That's what is evaporating and being eliminated. I know of virtually no other provider in the nation that does that. So that's really something that's going to help make investors profitable. And you mentioned the name Chris earlier. We're talking about Christopher John. CJ, often for you, the investor, who'll be your first point of contact when you get a hold of freedom there to get more property in your portfolio. Flip and Dani, something that people often don't talk about very often is this whole notion of how we need to begin with the end in mind. Oftentimes people are gung-ho about buying properties, but beginning with the end in mind means, well, what is my exit strategy? Do I have any idea of what my exit strategy might be after I sell this property after 8 years of hopefully cash flow and appreciation? So talk to us about some of those exit strategies. When an investor wants to sell their turnkey property at the end of its cycle, how does that look?
Well, one of the first things we always tell them is give us the ability to look at it first, because we've already done everything to the property. We already know the property. We sold it to you. And hey, you know what? If you don't,
we'll buy it back.
We'll buy it back from you easily. And we've done this on a number of occasions already, because you never know what the end is. You might go into this, say, I'm keeping this for 30 years. And 2 years later, you got to sell it. And we've actually happened with a few guys already. We want to be there to help you out and to, whether it's we're buying it or we also have a brokerage or whether we're just putting it on the MLS at a discounted rate. So that way we can help you sell that property to somebody else.
Okay, and it is a discounted rate, somewhat less than that 5 to 6% in seller commissions that a seller often pays to an agent?
Correct. That's exactly right.
Typically, we're doing like a 4%. So we're only going to get 1% because we don't want to discount the buyer agent, right? Because I'm sorry to say this, but buyer agents will look at properties and see how much they're going to get paid. And if they're typically used to 3%, they want that 3%. So we're just discounting it on our side.
Yeah, that's really generous and a great option for people when they look at their exit strategy over time. In fact, I often recommend that buyers don't hold turnkey properties for much more than 8 years. Maybe if you've really got a star performer, you do, and maybe you can do a cash out refinance. But over the long term, depending on what appreciation is doing, it often makes sense to sell that property, keep your return on equity higher, since the return from equity that accumulates inside it is nothing, and trade up for more property. And yeah, don't get too attached to properties, get more attached to people. Flip just told us earlier on that most properties are done to the same renovation standard, for example. So it's nothing that you want to get too emotional about. Flip and Dani, tell us more about your turnkey properties. And in fact, let's go a bit outside of turnkey properties, because you really focus on the investor, and this might transcend that, because some investors are more concerned with investing on the active income side and others want to be really passive. So tell us about some more of those options and just how you help match investors with the real estate product that's right for them.
CJ, who is the very first point of contact, he's the person that's essentially saying, what are your goals? What would you like to achieve, so that we can really understand how we can help each investor better, because we have a wide variety of investment options. So some of our active investors who like to help make decisions, they want to have input as to what the rehab is. They love the instant cash flow. They love the equity advantage series. Investors that are more passive, sometimes they want their own property and to own it completely. Sometimes they simply just want to get to know us before they work with us on a higher level, and they become a private money lender just so they can have a short-term opportunity to invest with us, understand who we are and how we work. And then once they come out of private money lending, then they're going, okay, what else can I do with you? And so we're talking about syndications, debt funds, private money lending, turnkey properties, and the three options. We just ultimately say, who are you and what do you want to do? Do you want your money to be liquid? Are you active? Are you passive? And based on that knowledge, we can help provide them with opportunities and they can choose from there.
And also, I know that you have some compound interest options and set it and forget it options for investors.
Yes. So this is something that we're beginning to roll out because some of our larger investors, they are more inclined to say, I love your returns, Dani, but I want to be able to give you money and I don't want it back. I don't want the quarterly distributions. I don't want ever to see it again for like 5 years. What can you do for me? So we've already, the very first person that said this to us, we started compounding interest. So all of his quarterly disbursements, instead of sending them to him, he says, nope, keep them and then just let them compound inside of the note that we created for him. It was a very unique thing. And then we had other people saying, I would like to do that. That sounds fantastic. They're just wanting to, there becomes a level where you're not only wanting to make more money, you're wanting to keep the money and be as hands-off as possible because you don't need it. You just need it growing and in a safe spot that you trust. So those are things, and we're starting to do that more. We're actually going to create, a brand new thing. It's not ready yet, so I won't say too much, but we're just always looking to serve our investors best way we can.
There's always something in the works.
Yes.
Yeah, it's interesting when you bring up some other options and suiting investors with what's best for them. The way I think of it, Flip and Dani, is it's hard to think of a better vehicle for wealth creation than turnkey real estate investing when someone is in that wealth creation phase. But when they're in that wealth maintenance phase later on, maybe they do want even more passivity. I'd like to know if you have any last thoughts. And again, you, the listener, can go to gremarketplace.com/Cincinnati or /Dayton to get started with turnkey property there in Southwest Ohio. Any last thoughts, Flip and Dani?
I think the only last thoughts are don't be afraid to pick up the phone and call us. We love talking to people. We love getting to know people. We love feedback, even when it's bad, because it's the only way we can fix problems. So, jump on the phone with us. We're always about getting better and better and serving our investors better. And therefore, we're serving us better, too, because we are one of the clients.
Well, Flip and Dani, you've lived up to the power couple moniker today. It's been fun talking about turnkey real estate investing in Southwest Ohio. Thanks so much for coming on to the show.
Thank you, Keith.
Thank you, Keith.
Flip and Dani Lynn have an interesting history. They both went to college in Florida. They both played trumpet professionally at Walt Disney World in Ohio and on Carnival Cruise Lines without ever knowing each other until a hurricane hit and it caused both of their cruise ships to dock in Nassau, Bahamas, and that's where they met for the very first time. Isn't that a cool story? And although they enjoyed 10 plus years of life on cruise ships, they are pretty happy to be land-based now, and they specifically moved to Ohio from Arizona for that cash flow. Now, importantly for real estate investors, the numbers really work here. They're one of the few areas with rent-to-value ratios still near a full 1%. So you can get started with putting some turnkey property in your portfolio here. This provider is actively sourcing inventory in Ohio. And I will share with you that this provider is such a strong team that I have chosen to invest my own money with them as well. Well, it sure has been a strange world lately, but if all goes well, I am off for a vacation in Ecuador, including the Amazon and the Galapagos Islands. Closer to home here, if it sounds interesting to you, I encourage you to get started with today's provider at either gremarketplace.com/Cincinnati or /Dayton. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.